Okay, now it's recording. Now, lease in summary. So lease is a contract of two persons, right? Between two persons, whereby one person conveys the right to use an asset. Of course, it has to be an identified asset, all right? Not just use any of my cars or take any of my buildings. No, that is not lease. Lease must have an asset identified that this is a particular item that is being leased, okay? Then, of course, that asset using, you are using it for a period of time in exchange for a consideration. Okay, now IS 17 is on under IS 17, only finance lease were reported on the balance sheet. All right, while operating lease were off balance sheet, even though they created similar asset and obligation. All right, yes, so they have similar, we call them similar because it is not entirely the same thing. Operating lease is usually less than a year, right? Just like we said. But of course, they also create assets and liability. So that's it. Now, but the problem there with IS 17, since it's only showing finance list, it's only presenting finance list, is that there's lack of transparency. It doesn't show the true picture of the financial statement and misleading leverage and asset usage information. We can misuse the information on an asset. All right. So an example is a US company in 2005 that had 1.25 trillion naira off balance sheet lease commitment. So transactions of 1.25 trillion and is not in their balance sheet because it's an operating lease. Just imagine that. So imagine someone taking the whole of National Stadium as leave as on under a lease. So let me take an example now. This for those who are in Abuja, the National Stadium in Abuja, how much do you think they lease it per hour? Is anyone aware? Is anyone aware? No. So now the National
No.
Stadium, the main bow of what's it called? Abiola Moshid Abiola Stadium. The main bow is leased at 1 million naira. As at last year or 2 years ago that I went there. Yes, that I got the information. I think it's almost it's 2 years now. Yeah, 2 years ago, right? It was it was 1 million naira then. So imagine using that main bow for every of our training on a weekly basis or even on monthly basis. That's about 12 million naira. And then it's just for a few hours per hour. So imagine that, and then in my balance sheet, I can't put it in my balance sheet. I'm putting it in my income statement as an expense. It will sweep off the whole of my profit for that year. I hope you understand. So that's it. So this will not show, it can give a misleading information about the true picture of the business. So the solution was now to eliminate IFRS 16. I mean, IFRS 16 was now to eliminate that IS 17. All right. And then to eliminate the distinction between the finance and operating lease. And all leases with limited exceptions are brought onto the balance sheet. All leases are brought onto the balance sheet with limited uh, exceptions. So that's it. So now IFRS 16 applies to mineral oil lease, biological assets. What are biological assets? Anyone? IS 41, what are biological assets?
But things like
Like
animals like
animal,
horses,
Yes,
plants.
no, yeah,
horses, animals.
agriculture, right?
Agricultural
Yeah.
produce.
Yeah,
Yeah.
agricultural produce. Thank you. So plants, animals,
Agricultural produce.
agricultural produce, all of them are biological assets. Biology has to do with
So
study of life, Abby. Yeah, so anything life that can grow. So that's a biological asset. Then also we have a service concession arrangement, intellectual property license, and some intangible asset licenses under IS 38. So now there's a difference between now the lease term we use, right? The what do we call the definition of terms? So there's something called inception. There's another thing called commencement. Inception is when you have yourself in contract, when your contract is to take effect. All right, effective from so. Commencement is when you, the tenant, started using the asset. So it's just like for those who are doing advanced tax, right? Under your basis period, there's something called under your basis period where we have what do we call it? Commencement of new business, right? There is a difference between incorporation and commencement. Yes or yes?
All
Yes,
right.
sir.
Now your
So sorry.
inception date is your
Wait.
corporate corporation
Oh, I
date
do.
of
Oh,
incorporation. Koduro, please,
oh,
oh,
one drink of it.
please mute yourself, Koduro. Thank
Yung,
you.
yung,
Who is that person? Who is that person? Auntie Sarah, is that you? Thank you. Now, inception is your date of incorporation, the date you commit yourself into the contract, into the lease terms. Okay, this is it, oh, this one is this, oh. So you will take the project, you will take the asset from so date to so date. Let's say you take the asset from 1st of September to 30th of August 2026, 1st of September 2025 to 30th August 2026. That is the commencement date. That's the period. But now, if we are signing the contract today, it means today's date is the inception date. Okay, so when we commit ourselves into the lease terms, that is the inception date. But when we start using the asset, is the commencement date. So how do we identify a lease? All right, now a contract will be a lease if it depends on an identified asset. There must be that asset that you are leasing. Do you understand? And that's why under your PPE, when you're preparing your PPE schedule, your leased item will not be in PPE. You have a separate classification for them. They will not be under PPE. Have you seen a PPE schedule before? Yes, Abby. Nobody said
Yes, sir.
anything. We've seen the PPE
Yes,
schedule
sir.
before, Abby.
yes,
Yes,
you
sir. Yes,
have.
sir.
Uh-huh. So that's it. So when you see an asset register like that, asset register is different from PPE schedule. I don't know if you
Definitely.
are able to differentiate between them, but asset register is different from PPE schedule. Uh-huh. So that's it. Now, when you see a PPE schedule, you will not add list item to it. It will definitely have a separate category. All right. It's just like when you have intangible assets as well. You have them under separate categories. So that is that. Now, an asset is a lease. A contract is a lease if there is an identified asset and the customer controls the use of that asset. When the customer controls the use of that asset, then it becomes a lease. So when we're talking of control, we are saying that you have the right to obtain substantially all economic benefits, including capital allowance. I don't know if you understand me, including capital allowance. So which means you can recognize
Yes,
it
sir.
as an asset and then you can depreciate it. So for SBR purpose, you can depreciate it and put the depreciation, expense the depreciation in your financial statement. You can expense the depreciation in your financial statement. And for tax purpose, you can collect capital allowance on it. Do you understand? Especially if you are the first person to lease the asset, you will claim initial allowance and annual allowance. But if it is a second-hand asset that initial allowance has been claimed on it, then you will not claim initial allowance, but you will claim your annual allowance for all through the period you have it. Am I right? So that's it. So please, if you think you're getting lost, because you already know my style. For those who have been attending the classes, you know that I will not just stand on SBR. If there is anything that has to do with taxation, I'll mention it. If it is SFM, I'll mention it. CSMA, all right, those things. Please. But if you think I'm mentioning something you don't understand, just call me back. Ask questions, and I will do that. All right. Now, the next we have is that the control, like we said, when you have all economic benefits and you have the right to direct how and what purpose the asset is used for, when you can determine how you want the asset to be used. Okay. So when you can decide on how you want your assets to be used, then it is a lease. But it is not a lease when the supplier has the right to substitute the asset. When the supplier can say, no, change this asset, or this is not our asset, or let me change this one for you. Come and take this one. Then that is not a lease. Please, I hope I'm making sense here. Hello, are we there?
Yes, sir.
Yes, sir. Well, we
Yes, we are.
Yes, you are
Okay,
making sense.
so that's it. Now, the lease component. So when we are looking at the cost of a lease and the components of a lease, what are those things that will make the total component of a lease? Is that hmm? Okay? So hold on a second, please. So when we're talking of the components of a lease, right? We're looking at the contract itself, which includes both the lease and the non-lease components. That's where we have non-lease components and the lease component. Okay, so for the lease component and the non-lease component is definitely repair and maintenance. Do you understand? So just like we said, for there is a particular lease that the tenant will be the one to take care of the electricity. Sorry, 1 second. Hold on a second. Now, sorry, I'm back. Oh, I hope we can continue. I hope we can continue.
yes, sir.
Now, so the list item and the non-list component. So the list component is what you have list, the item in the contract. The non-list component is repairs and maintenance and the rest of them. All right. Now, a lessee must separate them unless it's using the practical expedient whereby you treat the whole expense as a lease. Is that one answering your question, sir? The person who asked the question earlier. Does that answer your question? Does that answer your question? The person who asked the question earlier about do
Yes,
you add costs? Does that answer your question now?
yes, I'm fine. I'm fine.
So relatively, you are to separate them, okay? But where you don't want to separate them is where you are using the practical expedient, and then everything is used as the cost of the lease. All right. So that's that. Now, also, you have to allocate payment based on standalone price. You will not accumulate it. Let's say you list 5 different assets, even if it is just two, you will not add them together. You will give us the lease of each and every one of them. Okay, the lease of each and every one of them. You have to do that. Are we together, please? Are we together?
Yes, sir.
Yes,
Yes,
yeah, we are.
So that's it.
Yes, sir.
Now, all of them are at their standalone prices. At their standalone prices. Okay, so that's it. Now, lease term. A lease term is where the period we are talking of, the non-cancelable period. It will include now the lease term is the contract, terms and conditions, okay, of the contract. So now in that lease term, you will see the terms which includes the non-cancelable period of the lease. So if the lease is for 5 years, that means it cannot be cancelled for 5 years. And periods with extension or termination options. Okay, even if you want to terminate this lease, or at least you must use it for the first 3 years. So if you now want to terminate, you can terminate. That is an option given to you. There might be no penalty if it was included in the contract that there will be no penalty. Does that make sense? Does it make sense that there will be no penalty if it was included?
Yes, sir.
uh So because it can also be included in the contract that if you want to extend, though, you can extend. This is the cost. If you want to terminate, though, you can terminate, but this is the cost. It will not be as expensive as the non-cancelable period. So it depends on the contract, which you have to figure out by yourself. All right. Now, another thing is that the period of that extension, if it is reasonably certain to be exercised or not, whether extension or termination, it will include, if it is reasonable. If it will be there, you will see it. If it is not there, you will see it. If it is something that is certain that someone will take, you will see it as well. All right. So these are the things. Now, please, all the examples. So the example is like 5-year lease plus 5-year extension at 1 naira for 10 years. You see this 5-year extension, you can see the cost. Can you see the cost of 1 naira? So this is what I was saying earlier about when you use the lifespan of the asset. All right, I'm coming to that. So I'm still coming to give us one thing about lifespan and the duration of a lease. I'll still differentiate that. Now you can use the whole lifespan of the asset. Then after using the asset, you are given the uh what's it called? The option of buying the asset. Are we together, please? You can also be given the option of buying the asset when you are done. Are we together, please?
Yes, sir. Yes.
Well, we do.
Yeah. Now, when you use an asset for, let's say, a motor vehicle of 4 years, and you used it for that whole 4 years, maybe that's the lifespan of the asset. You can be given the option of buying the asset at 1 naira. Does it make sense? A motor vehicle, you're asked to buy at 1 naira. Do you think it makes sense? And do you think it's possible?
It's possible.
Eh?
It's not possible. Yes, yes.
It's possible.
Okay,
Because
yes, it is possible. Now, the thing is that, you see, lease itself, what you will pay for lease is more expensive than the cost of the asset. Oh, I hope you are aware.
Yes.
Eh?
Yes.
Yes.
Aha. So if it is possible, yeah, it is possible. If that one can be done, it is possible. Do you understand? So they will give you that, okay, buy it at 10 naira a motor vehicle. That's the cost. Because by then it's already at scrap. Do you understand? It's already at scrap. So that's why they do it like that. Now, that's for lease. Now, we come back to the lease payment. A lease payment can be a fixed payment, less any incentives, right? Like, what do we call it? A rebate or a discount. All right. Yes, that fixed payment is there, less any incentive. It can be a variable payment based on index or rates. So I can lease my property, my warehouse, for a manufacturing company and tell them that uh, on every yard of adire you produce here, you pay me 15 naira. On every yard of adire you produce, you pay me 15 naira. Every yard of cloth, senator material that you produce, you pay me 15 naira. Some is just at 10 naira. I'm not too expensive. Just pay me 10 naira on every biro when I know the number of biros Nigeria sells in a year. Do you understand? So that could be the lease that a variable payment based on the index or the rate. Then another one is that the lease payment can give you an option to purchase. All right, you can have the option to purchase. You can also have penalties for early termination. All this will be in the lease agreement as well. Okay, so that's it. Now, your lease will not include variable payments based on performance. That is 0% of revenue. Hmm? So I'm not using revenue. I'm using production for my own case. And sometimes it might not include them. You might not write that performance of input in your lease. It can just be at a rate. Like this is the percentage, just 1 naira. So you don't have it on whatever revenue you make, you pay me 10%, 50%. No, you will not do that. Then also payment for non-lease components, you will not be there. If you didn't, if you lease an item, of course you repair, but your lease agreement will not say that this car we get for to like after 2 years, after 6 months, you must service the engine. Oh, you not say that the maintenance, the repair and maintenance or the servicing of that car, you're not including it in the contract. No, it's not part of the contract. It has to be excluded. Now we have something called residual value. We know what residual value is now in our normal PPE. All right, that is what remains after an asset has been fully depreciated. Abby, am I right? Now, in this case of lease, it is known as what the lessee guarantees asset value at the end of the lease period. That is, after I use your car for 4 years, at least I can guarantee you that you'll be able to sell this your car at 500,000. So that is the amount, the value me I am guaranteeing my landlord. Okay, then we can also have an unguaranteed residual value as well. All right, whereby I can't guarantee you or any related party cannot guarantee it. So that's what we have there. I hope we can proceed. We can proceed, right?
Yes, yes, sir.
Now we have an interest rate or implicit rate in the lease. Interest and implicit rate in the lease. So the interest rate is a discount rate. Yeah, a discounted factor, a discounting factor, whereby it will make equal the present value of the lease payment plus residual value.
Things that we are not seeing the board again.
Okay, can someone else confirm that, please?
I can see for my
We can see it, so.
I can see it.
Can you see it now, sir? Can you see it now? Okay, I
No,
think
sir. Maybe it's my network that will be
yeah,
lagging.
I believe it's your network. So
Okay.
look at the network, please. It's your network. Yeah, thank you. The person has logged out. Okay, we can continue. Now, our interest rate is whereby the PV of your lease plus residual value equals to the fair value of the asset plus the initial direct cost. So how do we get the present value of our lease payment after we've discounted it, Abby? And then you discount the residual value as well, right? So the PV of your lease payment plus your residual value. This one has taken us to investment appraisal, right? Yes, we have it here. Yeah, good night, sir. All right, where that addition equals to your fair value, the fair value of your asset plus the initial direct cost. Now, if it is unknown, then we are to use the lessee's incremental borrowing cost. Lessee's incremental borrowing cost or borrowing rate. Okay, so you can see it as an interest rate or a discount rate or an implicit rate. You can also have an incremental borrowing rate. All right, so that's what we have. Any questions so far? Any question before we go into the lease account? Okay, I believe there is no question. Now we have the lease accounting. Now for our lease, how do we recognize this? We mentioned that before, that you recognize lease when you have the right to use the asset, right? And then you recognize it when there is a liability to take care of. Now, how do you measure lease? Don't forget the two recognition criteria: when there is a right to use and when there is a liability to sort out, to pay, when there is an obligation to pay. Number two, measurements. So we have the initial measurement, we have subsequent measurement. Now the initial measurement will be that your lease liability will be the present value of the lease payment discounted at implicit or borrowing rate. Please, this page 81, let's note it because we use it in our next class in any of our questions. We know that in our next class, that's where we'll solve questions. So now, for the right to use the asset, one second please. Becky, please help me with water. Please. Yeah. Now, for the right to use the asset, okay, we have a lease liability. We have a lease liability, right? That's the right to use the asset. So for your right to use the asset now, your lease liability is there, right? Your lease payment made before commencement or at commencement. Sometimes you can have an initial deposit before you start using the asset. Sometimes it is at when you start using the asset. Don't forget, you can have a prepaid and postpaid, Abby. And you can have a prepaid where you pay in advance and you pay in arrears. Yes, we can have any of those two as well. All right. So your payment before commencement or at commencement minus incentive like rebates and discount. Then you also have initial direct costs given to you. You also have the cost of dismantling the asset or restoration obligation. And what is this cost? I hope we are together, please. Can anyone hear me?
Yes, sir.
Yes.
Okay, so that means I can
Yes, sir.
proceed. Now, the cost of dismantling the asset, I think we've mentioned this as well before, whereby, okay, if I use your land, if you are giving me your land for lease, at the end of the lease agreement, at the end of the lease period, thank you. So at the end of the lease period now, I need to take away whatever I construct on that land. For instance, you know that a lot of people have this container. They construct a container like houses, right? Like store, security posts, right? It can even be an office where they will fix AC to it and all of that. Yes, the cost of dismantling that and taking that, what do we call it? That container away from the land, right? To dismantle the whole concrete and all of that that you have put there. That cost also is part of the cost of the uh, lease. Now, the subsequent measurement after you've added all these costs, the subsequent measurement on that same right to use, right? You can use a cost model as well, which is of course by default. And for certain assets, you can use revalued model, and that's an asset like investment property. IS 40 use a fair value model, but for IS 16 use revaluation model, right? The two of them are still the same thing, it's just the usage. So that is it. Now, the summary of the key terms are here now. So for the lease is the right to use an asset, right? Identified asset itself has to do with specific asset with no substantive substitution right. It's not like, okay, be using this one first. I'll bring you another one. You don't have the right to change it anymore. Then, wait, I think I saw something. Okay, yeah. So the next one is that you have a control over the asset, which is the right to economic benefit and direct usage. And also you have the lease term, which is the non-cancelable period, plus likely extension or termination period. We have the lease payment, which is the fixed index and all of that residual. All of these have been mentioned before. Now, the criteria for recognizing customer lease as an intangible asset. I thought we've done this before. Why is it coming back? Okay, probably when we are okay. Yeah, let's just take it as well. Now, for customer lists as an intangible asset. No, we've done customer lists before. We did it in our last class now. IS 38, and it's an intangible asset. The first thing is when you identify the assets, right? It must be separately identifiable. It arises from contractual right. I think we've done this before. Let me
Yes.
check my other matter. I think there is an overlapping here. We've done this before. Okay, so let's leave the
Off that toilet. Is it not? I don't know what's wrong with that girl.
oh, okay. So this came back
Turn on, listen.
again, I think.
It's not. It's working, but it doesn't have gas. But the weather is cold now, so
Okay.
it doesn't have gas. We'll put
Okay, so
gas
I
in it.
can Madam, please, oh, can you please mute your
Auntie
side?
Goodness.
Please. All right, I guess we can continue now. Now, the lease accounting for reassessment and modification. Yeah, after the initial and subsequent recognition, right? Yeah. So we've done the initial recognition, we've done the subsequent recognition. The next one is the lease accounting reassessment. Lease accounting reassessment and modification. Now, reassessment is triggered by changes. So why do we need to reassess our lease term? Why do we need to reassess our lease recognition? Okay, so it has to do with changes in the lease term, changes in the index linked payment, okay, changes in the residual values guaranteed. So when there is a change in any of these, then of course we can have a remeasurement, reassessment. We can have a reassessment, all right? Now, we can also have a remeasurement of our lease liability when we use a revised discount rate. Are we together, please?
Yes,
When
sir.
we use a revised discount rate, yes, we can have that. Then also, when we use a revised rate for changes in the lease item, lease term, or the purchase option, or when we use an original discount rate for changes in the residual value or guaranteed index-based payment. So yes, we have to remeasure when there is a change uh, in our discounting discount rate. All right, for changes in the lease term, the purchase option, the residual value, or the guaranteed or index-based payment. Okay, now what about lease modification? So we can have this remeasurement and reassessment. We'll see our question on it. Don't worry, we'll have a question on it. Now we have lease modification. So why do we modify lease? Now, lease modification can take place. It is also a change in scope or consideration that is not part of the original lease. It is a change in the scope of the lease, the consideration of the lease that was not in the original terms. Okay? It's not in the original terms and conditions of the lease. So that's it. Now, this modification would occur if we have a separate lease, that is where we have additional rights of use at stand-alone price. Eh? If it is a separate lease, then we account for it as a new lease. But if it is not a separate lease, then we adjust the lease liability and the right of use asset. Okay? So if it is a separate lease, that is the asset you are modifying, the asset that is not that you are buying, for instance, is not in the scope before. So let me give us an example now. I would have asked you to give me an example, but time has gone, and we'll complete this uh, objective side today, whether we like it or not. Now, for instance, someone who is staying in a room self-contained. Now, the person wants to get married, and he decided to contact his landlord. His landlord has another apartment that is like a two-bedroom flat. He's living in a room self-contained as a bachelor now, right? Whether as a guy or a lady. Now he wants to get married and is thinking of a two-bedroom flat. He simply goes to the landlord, contacts the landlord, and then the landlord, who also has a two-bedroom apartment, agrees that okay, fine, yes. Now, for a non-cancelable lease, let me bring out this point. For a non-cancelable lease, if you want to change an apartment like that, it can be allowed. For a non-cancelable lease, oh, it can be allowed. It can be permitted. You will not pay penalty for canceling it, because that one will not be seen as cancellation. It will be seen as modification. Do you understand, please? That is modification, not cancellation, because you are renewing the lease, the same lease with the same landlord, but you are renewing, you are getting a better one from the same landlord, which means you're actually bringing more money to the landlord. A landlord I am paying, let's say, for instance, I'm paying 600,000 for my uh, self-contained, and now he's charging me 1.5 million for two-bedroom flat, two-bedroom apartment. Will he not cancel? He will cancel, Monakai, and even give me change, safe. Do you understand? So that's it. Now, a situation like that is not cancellation. I hope we are together, please. That is not cancellation. That is modification. And that's what we are saying here, that when the terms of the lease changes, okay? When the modification that belongs to the lease, when these things change, then you can have a modification there. All right, so that's it. Now, if it is a separate lease, then you account for them as a new lease. For instance, uh, I want a two-bedroom apartment, but not in this building. Probably my landlord has another apartment somewhere else in another estate, and I said I want that estate. We can treat it as a standalone, but no, this one is still under modification, right? Yes, we can treat it as a standalone lease. But if I'm in the same estate, I'm in the same apartment, right? I just want from one bedroom to two bedroom within the same building, then that can be treated as just to adjust the lease liability and the right to use. I was controlling one room before. Now I have two rooms and a parlor. It could be as simple as that. So that is modification. All right. Now, so in your modification, which is if it is not a separate asset, it can be a reduction in scope. That is, I have two-bedroom flat before, but now I want a one-bedroom flat. Before, I used to live with my girlfriend. Me and my girlfriend were living together. And now we have broken up, or my girlfriend has Chapa abroad. So I don't need 2 bedroom again. I just want to have 1 bedroom apartment, a room and a parlor for myself. So I can decide that that one is a reduction in right to use or right of use assets. And my lease liability has also reduced. So the difference now will go into my P&L account. If there is any other changes, then I'll adjust it as well. And I'll adjust my right of use asset directly. So that's what we have there. Now, in the books of the lessor, that's about the book of the lessee. Do we have any question on that? And can I proceed? Hmm?
Proceed.
Okay.
Yes.
Now, in the book of the lessor, like we said, we have types of lessor. We have the finance companies, we have hire companies, we have manufacturer or dealers, and we have property companies. All of them, then they. Okay. Now, in each of these companies that we have as lessors, now we know we have hire purchase, Abby, and I think IFRS or is it IAS that cancelled out hire purchase. We don't do hire purchase anymore, right? Now it's lease. But does it mean there is no hire purchase? No, it doesn't mean there is no hire purchase. All right, so that's why we still recognize them that we can have it as a finance lease. You can have it as what do we call it? Hire companies, manufacturers or dealers, and it can as well be a property company. Now, when it is a finance lease, just like I told us, I said that substantially all risk. No, okay, I gave something else. But all risk and rewards of an asset, all risk and reward of an asset is transferred to the lessee, the tenant. Hmm? All risk. That is, if there is any loss, you bear the loss. If there is any benefit like capital allowance, you enjoy it. Do you understand? Now, it transfers to the owner, to the lessee, the tenant. Now, for operating lease does not transfer substantially all risk and rewards. And that's why the landlord still holds his land. You will not still holds his building. You will not recognize your what's it called? You will not recognize your house rent as your own asset. It's not your own. You expense it. All right. So that's it. Now we have indicators of finance lease, just like I've mentioned to us before. The first thing is that transfer of ownership at end of lease. Ownership of that thing can be transferred to the lessee, to the tenant. Hmm? Before, the tenant has control, not ownership. All right. So that's it. Now, another thing is that there can be a bargain purchase option. What is bargain purchase? When you purchase below the value of the asset, Abby, at the end of the asset. Then also, lease term covers major parts of the asset, which I mentioned as well before. If the asset is 4 years, the lease can also be 4 years. But lease cannot be more, the lease term cannot be more than the lifespan of the asset. The lease term cannot be more than the lifespan of the asset. What do I mean? If the lifespan of the asset is 4 years, your lease period cannot be 4.5 years or 5 years. Do you understand? Please, do you understand what I'm saying here?
Yes, sir.
Yes.
Yes,
Yes.
sir.
Yes.
Uh-huh. So that's what we have here. Now, PV of lease, the present value of lease payment, will equate the fair value of the asset. Present value will equate the fair value of the asset. And we have the specialized asset usage. Okay, specialized asset use or usage. Then also we have cancellation losses is borne by the tenant, by the lessee. The cost of cancellation. All right, if you cancel my contract that is meant to last for this thing, you might not get back your money, and you even be fined for canceling it again. Do you understand? So that's what we have. All right. Now, gains or loss in fair value accrue to the lessee. Yes, go ahead if you have a question. Go ahead.
Sorry, Tina, sorry for cutting you. What if it's the lessor that is canceling the contract?
Ah, and the lessor too.
What if
It is
in
a
any event
non-cancelable
the
one.
lessor wants to cancel?
It is a non-cancelable agreement. So if the lessor chooses to cancel, it will bear it.
What are the consequences for him?
Payment,
Sorry.
fines. There is a penalty, and there is money involved. It will be written in the contract. Hmm? It will be written in the contract. Shall we proceed?
Yeah, I'm good, sir. Thank you.
Mhm. So it will be in the contract. Whatever you want it to be, it will be in the contract. Now, lessee can extend lease at below market rent. Hmm? Lessee can extend the lease, but yes, at below the market rent. Now, that person can mute though. Now, when we have when we have land and building leases, so what do we have on that? Okay, I mentioned risk and reward earlier. That risk and reward of that land, of that risk, I mean, of that leased item is transferred to the lessee under a finance lease. So what can be the risk of an as of a leased item? Number one, when there is what do we call it? When there is technological obsolescence, all right? That is the assets, probably it's a it's a bakery where we are using oven. Now if that place is no more useful for oven, you be the one to take it. That's a risk. Technological obsolescence, like this thing is no more in vogue. It's not usable anymore. Not like it's not usable, but we have technology that has taken over it. All right. Then it can be an idle capacity. It can be variations in return caused by changes in economic conditions. You already believe that if I have that building, if I get that warehouse, I have this one, I have that one. I have so many of my customers who are always requesting for stock. And I usually tell them to hold on. So because I'm telling them to hold on, I just want to have my own warehouse in Abuja here and then stock it there. So that anytime they ask for it, I don't need to tell them to give me, I don't need to give them a ordering period to extend my ordering period. I'm looking at reducing my ordering time. Like instead of 5 days, I can just tell them you get it under 24 hours. At the end of the day, you bought that thing, you bought the warehouse, kept the goods in Abuja, and no customer is asking for it again. Do you understand? So that's an idle capacity. Okay. Now, or that's changes in uh return costs by that's variation, right? Yeah, variation in the profit you have estimated to what you got, what I ordered versus what I got. So what you think you will get as profit or as revenue versus what you eventually got. But when we are saying the reward now, the reward can be that the profitable use of the asset over its economic life. You will use the asset and you will get gains, capital allowances, like I mentioned before. Now, for a land and building lease, Now, before then, there's something we should take note of under lease, and that is substance over form. Who can remind us what substance over form is? Eh?
I think it means economic value over legality of a transaction.
Yes, the economic value over the legality of a transaction. Now, economic value is the value of the business, I mean, the value of the item itself. Legality is that this is what the law says, right? Now, whether a lease is a finance lease or an operating lease, hmm, it will depend on the substance of the transaction, no, in the same way. Now, in terms of finance lease, now, the legal form of a finance lease is that the lessor is the owner, right? The economic substance is that the lessee is the owner. Am I right?
Mm-hmm.
uh So, by law, under a finance lease, the landlord is the owner of the building. But by substance, economic substance, the tenant is the owner of the building. Oh, do we understand? So don't let us forget that. Eh? So the lessee is in the same position as it would have been if it had borrowed money to buy that asset, or if the person had purchased the asset. Eh? So that's why lease is a method of financing. I think I mentioned that before. Now, for land and building, so you have to split the land and building lease into land and building components. You will not do them together. Okay? Now, land is usually under operating lease. Why? Because it has no depreciable value. It does not depreciate. Hmm? Building depreciates, so you have to split the payment. Now, building can be a finance lease, it can be an operating lease. So you need to separate it. Your land is forever an operating lease. If I'm giving you my land to be using the land, it's forever an operating lease. You will not buy the land. Never. So for you to buy the land, it will be a different ball game. Now, allocation based on lessee's perspective of leasehold interest fair values. Okay? Under land and building, the allocation is based on the lessee's perspective. Now, if it is not separable, if you are using the entire lease, right? Now it means that the entire lease is also the same thing as the finance lease, unless both parts are clearly operating leases. That is, if they didn't give you in the question, if they didn't tell you the value of the land from the building, if they didn't give you the separate amount, that means the entire lease is a finance lease, except if the question says that these two of them are operating leases. So let's take it again in summary. Land is an operating lease. Okay? Land is an operating lease if it is separated. But if it is not separated from building, then both land and building is a finance lease. Unless the question says that the two of them together are operating lease. Alright? But if it is inseparable, so if the land is immaterial, you treat it as one unit using the building's life. It's the same thing as when you are doing your PPE. If you are given land and building, and the cost of the land is not separated from the building, you assume that the two of them will depreciate. Under depreciation, you subject the two of them to depreciation. In your PPE asset register, you will put the two of them under depreciation, right? But if the cost of the land is given to you, you separate. Now, in the books of the lessor accounting also depends on the type of lease. right? It could be the finance lease. It could be an operating lease. If it is a finance lease, have we not done this before? I think we've done this before. So many of them are just coming back together now. Okay. Okay. No, I think this is the types of lease now. So the types of lease, we are not taking them one after the other. Now, the finance lease itself, which we've discussed it, right? The substance is that it transfers substantially all the risk and reward to the tenant, right? The lessee. And the result is that the lessor will recognize it under his own assets, whereby the lessee will recognize it. All right. Initial recognition is that the lessor will recognize the gross investment, that is the lease payment plus the unguaranteed residual value. The net investment will now be the present value of the gross investments at a discounted interest rate. All right. Now, we also have the finance lease income recognition. All right. So, as the landlord, how do you recognize your income? Your receipt will be the interest income plus the repayment principal plus interest. Your finance income will now be the total lease payment you received minus the net investment at inception. Total lease payment you have received minus the net investment at the inception. What is the net investment? Now, let's say, for instance, we have a contract of my lease will be 5 million naira for 5 years. All right. The rent you'll be paying, the lease amount, 5 million naira, which covers for 5 years. So the total amount is 5 million naira, right? Now, from that 5 million naira, once I receive 1 million naira this year, I'll less it from the 5 million naira. That is my income for the year. I don't know if that makes any sense.
Mm-hmm.
That is my income for the year. Not the whole 5 million is my income. Oh. Only the amount that I received this year is my income for the year. Because the 5 million naira is not for a year, it's for 5 years. So you have to spread the income for 5 years as well. All right, that is that. Then another thing is that you recognize in P&L account over the lease term, just like I said. Now, for manufacturer or dealer lessor, the additional feature is that it is treated as a sale and financing arrangement. All right, so I came to you as a dealer, you are selling cars, and I told you, Oga, me, you go to look your boy in it. For instance, I have a customer who sells a car. So I can go to him that, say ideally, will you be looking at me? You are selling a car, me, I don't have a car. How about you give me your car and let me pay for 4 years. Don't forget, you can't use more than the lifespan of the asset. Let me pay for the car for 4 years. How much will you be paying every year? I'll be paying 1 million naira. How much is the car? Okay, no, let's make it a realistic. Let's make it realistic. But of course, I can get a 4 million naira car now. It just depends. It can be like Micra. It can be Micra or something like that. So that's it, right? I hope I'm not the only one in this class.
We're with
Yes,
you
sir.
now.
You are not.
Okay,
You are
We
not.
okay.
understood.
All right, that's fine because everyone has been silent for a while. Now, so if I go to a dealer like him that I need a car now, and this is how I want to be paying, in that case, you will treat it like a sale and financing arrangement. You will not treat it as landlord and tenant. He has sold it to me, and the mode of payment is like a financing arrangement whereby I'll be paying interest with the amount I'm paying. So that is it. Then also it generates two types of income. There is profit on sale, which is the difference between the fair value and the carrying amount. All right. And also there is a finance income over the lease term. So that's it. Now the revenue and cost will now be that the revenue will be the lower of the fair value or PV of the lease payment, right? We have the cost of sale, which is the carrying amount minus the PV of the unguaranteed residual value, right? So for operating lease, which is the next one we have here. Operating lease is that the landlord retains the risk and ownership, risk and reward, and asset remains on the landlord's balance sheet, all right, as PPE or investment, which means you can lease your assets even though it's still under PPE, IS 16 or IS 14. You can still lease, all right, but then it will be an operating lease. So the recognition of income will now be your rental income, which is usually on a straight line method. Yes, now is that not annually? And then your expense will now be the depreciation of the leased asset. Don't forget, the risk is still on the business, and depreciation is also a risk. So that is it. Then initial direct cost will be capitalized and amortized over the lease term. Okay, yeah, capitalize the initial direct cost. Okay, you capitalize it, and then you now be amortizing it over the terms, over the number of years the lease will cover. Now, another thing we have here is a sale and leaseback transaction, which I mentioned earlier that is a situation whereby a landlord becomes a tenant, where a landlord becomes a tenant. All right. Now, for those of you who are coppers in this class that you signed out yesterday, congratulations to you all. So I have a copper in transit who is traveling now, and I still need to check on the person, or I'll wait till after the class. So that's why I'm getting that's on my phone. I don't know if you can hear the vibration of my phone, it's distracting me. So that's it. All right, that's that. Now, sale and leaseback transaction, like I said, landlord becomes a tenant. How? The landlord will sell his own building. Okay, you sell your assets to someone, and then to that same person you lease it from him. That is sale and leaseback, and it is used to raise cash while retaining use of the assets. So how this is it. So when I sell the car to you, hmm, I'll collect your money. That is the money I'm supposed to get for 4 years. I'll get it all at once. Now, if the car is 6 million naira, I'll collect 6 million from you today. Now, let's say that is sales. So let's say the lease amount, the lease price is 8 million. Now, that 8 million I'm supposed to pay for 4 years. I've collected 6 million naira from you, right? Then I'll be giving you 2 million every year. You can see that's a smart move. So the 6 million I collected from you, I'll pay you back 2 million naira. I'll keep the 4 million. The 4 million I can use it for something else. Okay, so that is sale and lease back transaction. We also have the seller / lessee account when the transfer is a sale. Okay, for the seller, you recognize the original asset. Oh, this is not a lessee, it's a lessor. So you recognize the original asset as an asset. It's no more an asset. Then you recognize the sales proceeds. You recognize the right of use asset and lease liability. Recognize the gain and loss only for rights transferred in case there is more that was transferred. All right. Now, sale and lease back at above market terms. What are we saying here? That is when your sales proceeds is more than the fair value of the asset. All right. Or your lease payment is more than the market rate. All right. So that is it. That is sale and lease back at above market terms. Now we have treatment whereby you split it into sale plus loan. Now, when there is a sale and loan, you adjust the lease liability to remove the additional financing component for that loan. I'm selling it and I'm loaning it. Remove the additional financing component for the loan, and then limit your gain to the market-based amount. Okay? For lease and sales back below the market terms, it means that your proceeds opposite. Your proceeds is below fair value, or your lease payment is less than the market rate. And how do we treat it? You recognize it as a lease prepayment, whereby you adjust your lease liability upward to remove any prepayment. But if transfer is not a sale, then it is not IFRS 15. So you will not recognize the asset. All right, your seller, or you as the seller or lessor, you will not recognize a loan. I mean, both of you, both the seller and the lessor, will not recognize a loan. The buyer will not recognize a financial asset. Okay, so the seller, since it is a sale and lease back, yeah, sorry, it's a lesson. So since it is a sale and lease back, when you are selling it, that's when you become the seller. When you are leasing it back, is the lessee. Now, so for that, you as the seller that you are now leasing back will not recognize it as a loan. The buyer also will not recognize it as a financial asset. You apply IFRS 9. What is IFRS 9? Eh? Anyone? What is IFRS 9?
Financial instruments, I think.
Someone thinks financial instruments. Okay, you are
Financial
right.
instruments.
Yeah, you're right. You're right. So financial instruments. Yeah. So that's it. Now, disclosure now is that for finance lease, right? You have to recognize your gross and net investment, your unearned finance income, which is the gross investment minus net investment, your maturity analysis, your selling profit, your variable lease payment. For operating lease, recognize the lease income, recognize IS 16 disclosure for PPE, maturity analysis, and the risk related to retained rights in lease assets. Any question from anyone? Any question from anyone? In the absence of question, you should ask question, no, because we'll have our own question in the next class. But in the absence of question, that means we continue from here. We'll solve questions in our next class on lease. All right. So see you all in the next class. Good night, everyone.
Thank you, sir.
Thank you, sir.
You're
Good
welcome.
night.
Thank you, sir.
Thank you very much, sir.
Yeah, good night.
Thank you very much, sir.
Good
Good
night,
night.
sir.
Good
Thank
night.
you very much.
You're welcome. Good night, everyone.
Yes, sir.
Yeah, November 2019, question 2. Yes. What do we understand from the question?
The question has both lease and investment property inside.
Mm-hmm. Go ahead. The question also has, though we are solving question 2b, but the question also has foreign exchange. Am I right? The question also has foreign exchange now.
Yeah.
Foreign exchange transactions. Is that not so?
Yes, sir.
Uh-huh. The question also has foreign exchange transactions. Yes? Are we there, please? So what do we have from the question? What do we get from the question? Does anyone want to try? Does anyone want to try? Do we have anyone who wants to try? Okay, let's take the question one after the other. And then just like she started, we'll take the requirement which says that determine if the arrangement for the company vehicles contain a lease in accordance with IFRS 16 or not. So what do we do if you want to know if what is this question asking you to do? How do you determine if an arrangement contains lease or not? Go ahead if you have anything to say. I'm not looking at the page. Yes. What is the question asking us to do? Hello? Do you want a moment to think about it? Should I give everyone 30 seconds to think about what the requirement is? So everybody look at it. You have 30 seconds and the time starts now. What is the question asking you to do? What is the question asking you to do? On the list, let me show the requirement. I don't know. I can't show the requirement as well as the page at the same time. But of course, the requirement says that my system is hanging. But go ahead. The requirement is saying that how do you determine what the transaction is about?
Good afternoon. Good evening. Good afternoon. So, to my own best understanding, I feel the requirement is asking us that does the lease agreement comply with IFRS 16? We talk about disclosure and the recognition.
Go ahead, please. Yes, what are you saying? Is the 30 seconds not complete? Okay, few more seconds. Yes, what do we have?
I said that
What do we have?
the question is asking us that does the lease agreement of the company goes with IFRS 16 based on the recognition and disclosure of the assets.
Exactly. Exactly. So let's look at the recognition. Yes. Do we recognize this question as IFRS 16? And what does IFRS 16 say? What does the standard say about recognition? Yes, what's the objective of IFRS 16? Hello? What's the objective of IFRS 16? I'm waiting. What's the objective of IFRS 16? I thought we did this thing yesterday. Huh? So let me ask again. Has anyone gone through what we did in our last class? Has anyone gone through what we did yesterday? Huh?
Hello,
Okay.
hello, good evening, everyone. No, no, sir.
No, the silence is also
We have not
okay.
really gone through it.
Yes, sir.
We have not gone through it.
No, even your silence has answered the question. Silence is an answer too. Okay. So IFRS 16 wants to ensure that uh, the recognition, the measurement, the presentation, and disclosure of lease, right? It wants to establish principles guiding those things. IFRS is a standard, and the essence of the standard is to guide those four things: recognition, measurement, presentation, and disclosure. All standards, IFRS and IAS. Okay, now the objective now is to ensure that both the lessor and the lessee are providing the accurate information that is needed. All right, the faithful representations in such a way that your financial statement shows a true and fair view of the financial state of the organization. All right, now the standard also shows us that there are some accounts that the lessor should provide. There are some things you should see in the books of the lessor. There are some things you should see in the books of the lessee. So who is the lessor? Who is the lessee? The lessor is the landlord. The lessee is the tenant. Okay? Now, lessee, if it is a finance lease, lessee will recognize the asset, the leased item, the leased asset as its own asset. Am I right?
Yes, sir.
Yes,
Am
sir.
I right?
Yes, sir.
So the lessee is to recognize the leased asset as its own asset and its own liabilities, asset and liabilities. Because one thing about lease is that once it gives right to asset, it automatically gives rise to liability at the same time, right? The asset will now be the leased item. The liability will now be the payment you are making on that leased item.
Yes, sir.
Am I right?
Yes, sir. Yes, sir.
Yes, sir.
Feels like some of you don't believe that I'm right, but that's okay. Now, Bajakuta enters into leasing arrangement for the use of company vehicles. The vehicles are generally leased for a 4-year period, and they are replaced with the newer models at the end of every cycle. Automatically, since it is 4 years, it makes it a finance lease. Am I right? What
Yes,
type
sir.
of lease is this? It's a
Yes,
finance
it's
lease, right?
finance lease.
Yes, sir.
Okay. Now, the management of Bajakuta allocates these vehicles to designated employees and determines that these vehicles are to be used only for official purposes. The company which leases these vehicles to Bajakuta provides identical car models in its accessible parking lot within reasonable distance from Bajakuta's corporate offices. So the lease contract provides the lessor, landlord, the owner of the vehicle. It provides the lessor the right to substitute these cars at any time throughout the whole lease period. I can change the vehicle for you. So it's like having an arrangement with the transport system, the transport company. Okay? And the transport company says that, okay, how many vehicles do you need in your office? We need about 4 vehicles. Okay, fine. Every day I'll provide you with 4 vehicles. I can give you the same vehicle and I can change the vehicle for you. The only thing is that for those 4 years, you will have access to vehicles of that standard, of that range that you have chosen.
Yes, sir.
Do you understand?
Yes, yes,
Yes,
sir.
sir.
Eh? Okay.
Yes, sir.
Now, it is in the lease contract too, and that is not changing the terms of the lease. That's not lease modification or lease restructuring or whatever we did yesterday. Okay? Now, the lessor ensured this clause was negotiated into the lease agreement to ensure efficiency in its operations and keep its costs and pricing of the leased arrangement optimal. The lessor also provides similar vehicle leasing services to other companies. Is there any other thing on that list? The next one says Bajakuta acquired a piece of land for expansion. It has since been abandoned and management determines future use, blah, 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 blah.
No,
Is
sir.
this one this?
No.
The third paragraph?
No, sir.
No. So this is it was held for rental income. So we've done something like this before, so we should be able to look at this again. Now, so looking at this lease arrangement, yes, what happens? How do we apply it? Who is the lessor? Who is the lessee? And how do we treat this lease? Is it a finance lease or an operating lease? Yes? Who is Vajekuta? Is Vajekuta the lessor or the lessee?
Lessee.
Director is the lessee. Yes.
Lessee. Okay.
And it's
So,
equally a finance lease, not an operating lease.
The lease period is 4 years.
okay.
The lease period is 4 years.
The lease period is 4 years. Those are the attributes of the lease agreement. These are the things you look at before you can determine that this is a lease. The lease period is 4 years.
The vehicles, the
What again?
vehicles are to be used only for official purposes.
Vehicles are to be used only for official purposes.
So does it mean that a staff cannot take it home?
And since it is official purpose, it means it will bring economic benefit to the company, right? It means it's an asset of
Yes.
So what if a
And there
staff
is
wants
a
to somewhere else? What if a staff wants to use it for their personal whatever?
What if a staff wants to use it?
you can't use it, it's not part of
You
the
can't use
agreement.
it. Do you know that when you use an official car for personal use, do you know it is called, is that a fraud or embezzlement? That is
Yes,
called
embezzlement.
Okay, so how about the cars that are being given to staff and they go home with it, come to work with it? What happens when they go home? Can't they use it for their personal use?
It is for their convenience from work to house.
If it is for personal use.
So I'm saying that for them to have be giving it to them, that the company give it to them for official purpose, for the time they will be in the company. So it is for them to convene themselves from work to our houses and also do personal things. So far they are still in the company. Whatever they do is still official. If they are no more in the company, let's say if they resign today and they are still using the vehicle, that means it's improper. Do you understand?
So anything for official purpose, it means that it is given to you by the company to be used for official purpose. Now, a vehicle that is being used for personal purpose, for instance, just like you said, you took the vehicle home, right? And you're using it for weekend, you have a wedding to attend over the weekend, and you don't have another car. Can you take the car? Yes, you can take the car. But in actual sense, and there are some companies that are very strict at that you cannot use their car for any other personal purpose, like for any other personal purpose. Do you understand? You can't use their car. Do you understand? So that is that. Now, for this question now, yes, The question is talking about a finance lease. It is a lease, and of course, the company can still decide that they want to. The company and the lessor can decide whether they want to record it as finance lease or operating lease. Because if it is a finance lease, you really can't say it's a finance lease too, Sha. Why? Because if it is a finance lease, you can't just be changing it anyhow. One thing about finance lease is that the risk and the reward of that vehicle is handled or is benefited by the lessee,
Yes.
tenant, right? So which means any repair on that vehicle is to be handled by Bajekuta. And if that is the case, there will be no need for you to change the vehicle.
So I was about asking question on that before you mentioned it, because since they will have to be changing the cars for them.
They will have to be changing the cars. It means that if the car is faulty, the company will be changing it. That's the essence of changing it. So now it's left for the company and
We are hearing you,
shop.
sir.
I hope you can hear me.
We are hearing you, sir.
So it will be an arrangement between the company and the lessor, the landlord, the lessor now, the lessor, since this is not a building. It will be between them to determine how they want it to be treated. They can have that arrangement, whatever they decide. Do you understand? It could be that the cost incurred by the company on every repair and maintenance is still borne by the customer, by Bajekuta. So if that is the case, it means that the risk of that car is still being transferred to Bajekuta as the lessee.
Yes, sir.
Do we understand?
Yes, sir.
So that is it. Yes, what else do we have on it? Now, what will make Bajekuta identify this as a finance lease in the agreement? Now, don't forget that the supplier can change it. The supplier can bring in another vehicle, like a substitute, right? Now, in that case, that can make it an operating lease. But what will make it finance lease is that there are two rights that a supplier has. Okay? Now, it can be a substantive right if the supplier has both the physical, the practical ability to substitute that alternative asset, which in this case, that is what the supplier has. The supplier has the ability to change, to substitute the asset to another one throughout the whole period. Am I right?
Yes, that's what we have, sir.
Yes.
In this case, is that what we have?
Yes, that's what we have.
Now, there is another thing that can make the supplier, that a supplier can have as right. If the supplier has these two rights, definitely it is not a finance lease. It will be an operating lease. Now, the second right is that benefit from that asset, the benefit from that asset will go to the supplier. If the supplier has the benefit from that asset, that is, if the supplier can claim capital allowance on that asset, on that vehicle, then it is an operating lease. But if the customer can gain the benefits on that vehicle, and what are the benefits?
Yes.
For instance, capital allowance, right? We talked about incentive yesterday, right? The reward and the risk.
Yes, sir.
Am I right, please?
Yes, sir.
So if the customer or if the supplier has that reward, like capital allowance, if the supplier is the one claiming capital allowance on the asset, of course, it's an operating lease.
It is, sir.
Is that not so?
It is, sir.
So that is it. Any other thing here? Is there any other thing we've not mentioned on this?
They also said
the lessors also provide similar vehicle leasing service to other companies, sir.
Uh, so that means that's the standard. That's what the company does generally. All right. And the fact that they do it there, the arrangement with each of their customer will determine what type of lease. But in this case, if the supplier is the one that benefits from the incentives, then it is an operating lease. If not, it is finance lease. Do you understand what I'm saying?
Yes, sir.
Do you understand? Any other question from anyone?
Hello, sir.
So sorry, sir. Okay.
Hello, sir. Good evening, sir.
Yes, ma'am.
Okay, sir. The first paragraph,
Good evening, ma'am.
we have not even mentioned anything about it at all. Okay.
Yes.
Okay, sir.
This
Okay,
first
that's what
paragraph has a different requirement. The first paragraph is on
okay, sir. That's
exchange
what I
rates,
want.
and that's the requirement A. Briefly advise the directors
Okay,
how the
sir.
foreign exchange transactions should be accounted for. Second paragraph is talking about lease. Third
Investment
paragraph is talking
property,
about
yes, sir.
IS-40,
Okay.
investment property.
Okay,
So we've not done first paragraph. That's why
thank you
I'm
very
not
much.
going there. Now let's go into the third paragraph. We've done the third
Sorry,
paragraph
sir.
now. We've
Please,
done
let's
IS-40,
go
Yes, sir.
back to
right?
second paragraph. There's something I want to ask there very well. Okay, please, can you
Go
slow
ahead.
down a little bit? The second paragraph, just second
Slow down
paragraph.
to be
I need the
okay.
second paragraph. So okay, so this part where they said the
Yeah, yes, sir.
company which this vehicle to Bajekuta provide identical car model in accessible parking lot within reasonable distance from Bajekuta corporate office. The lease contract provide the lessor the right to substitute
Yeah.
these cars at any time throughout the lease time without the consent of Bajekuta. In that aspect, I'm thinking that that two sentences is looking to be an operating lease because they're not transferring the risk because they say they can change it at any point in time. So now
Yes.
I'm considering could it have
We
been
said that too.
yes
We said that
could it
too.
have been an operating lease?
I said it that there are two conditions that will make it an operating lease. Number one is control, and the control belongs to the supplier in this case. And how does it belong to the supplier? That's the line you just read, that the supplier can change this thing at any time. Do you understand? The supplier can change the vehicle. Now, why do they have a similar vehicle? So that they can change it, and then you don't have to feel different from the car. No, please give me that GX470. That's the one I like. No, if it is GX470, everything is GX470. So they can substitute the cars for you. They have the right to substitute the cars throughout the whole list time. That one shows that it can be that one automatically is an operating list because it means that the lessor still has control over the
Yes, sir.
vehicle. Right? Now, it will be a finance lease if the benefits and risk of that vehicle goes back to the customer. For instance, every time you take the vehicle to the supplier, whatever cost of maintenance they have on that vehicle, Bajekuta will be the one to pay for it. In that case, it is a finance lease. And don't forget, this specific right to substitute the cars was negotiated into the agreement to ensure efficiency of operations and keep the cost and pricing of the arrangement optimal.
Okay, that's just like an agreement
Do you
between them.
understand? So you can call it an operating lease, but it will only be an operating lease if the second line, and the second line is that the risk and reward of this asset is enjoyed or is transferred to the supplier. If the risk and reward is transferred, is still with the supplier, not transferred because it's with the supplier. If the risk and reward remains with the supplier, then it is an operating lease. If not, it is a
Okay,
finance
sir.
lease.
Thank you.
Any other question? But of course, we have other things that are making a finance lease. The fact that it is 4 years means it is a finance lease. Operating lease will never last for more than a year, right?
Hello,
Am I right?
hello, sir. That is what I wanted to ask before. That
Yes,
in
ma'am.
that lease IFRS 16 is talking about leasing, and it has only two methods of, calculating it. I think we are saying finance and operating lease. So now you said
Lease.
now you differentiate to something.
We have
Okay,
two
sir.
methods,
Okay,
not
sir.
only two.
Okay,
It's the
sir. I
ones
am
I quoted.
joining you just for the first time. So, okay, sir. I'm enjoying it. Thank you, sir.
Okay. So we have the one that is done by a manufacturer as well, whereby the manufacturer produces, right? And we have the one like a supplier like this one. So it can be an operating lease, it can be a finance lease. Shall we proceed, please?
Okay, sir. You can proceed, sir.
Shall we? Now, the third question says that, the third paragraph, Majapahota acquired a piece of land many years ago, for which it intended to construct a new factory as part of expansion. A new factory as part of expansion. The expansion plan has since been abandoned and management has yet to determine the future use of this piece of land. The land is currently measured at cost in the book, and in addition to that, Bajakuta owns other properties in a high-growth location which are currently held to rental income and for capital appreciation. Those two things, once you have the two there, it becomes IAS 40, like non-negotiable. Do you understand? Those are the two attributes of IAS 40. To collect rental income and for capital appreciation. Once those two attributes are there, then it is IAS 40. Okay? Now, for capital appreciation, as the value of the properties in the location has increased approximately by 28% in the last 2 years, Bajakuta measures these properties at fair value. Advise the director if the measurement method currently applied to piece of land is in line with IAS 40. Is it in line with IAS 40? Measurement, and what is our measurement at fair value?
Yes, sir.
Abi? So, is that the measurement?
Yes, sir.
Okay, so what do you say? Will you just say
It's
that?
measured at a fair value, and we are going to use revaluable method to it. Oh,
I'm going to use what?
So there will be no depreciation.
What do you say? There will be no depreciation, okay? So now what the question is actually saying is this. Explain everything you know about IS 40.
okay.
Don't just say yes.
Okay. That if
You are to
any
advise.
company, hello, sir.
When you are to advise
If
like
any
that,
company
tell
has
everything.
a
Yes,
property
ma'am.
and they are not using it, they rented it out to whoever. IS 40 said once they are not occupied by themselves, we have to Um, I read it, but I'm not really understanding very much. So, okay. The site in IS 40 says, while the company owns a property and they are not occupying it, they have to just they have to do the fair value of it, and land is not depreciate, so they cannot do any depreciation on land, but building they can do it. That's where I can just explain myself.
Okay. So now, what is IS 40 and how do you recognize IS 40? So IS
Yes,
40
it's
is
on
an asset,
investment
right?
property.
Now, that asset will also generate economic benefits to the organization, right? But it is outside of their activities. The only thing they are held for is for rental purpose, to earn rental income and for capital appreciation, right?
Yes, sir.
Yes, sir.
Do you understand? Now, this piece of land, we have to talk about the piece of land, not the, wait, where is it? Not the property, owns other properties, not this one, no. The question is saying, advise the directors on how to apply the piece of land, not on the property, the other property of this one. No. Whatever the question is saying is from here to here, the first 4 lines. Now, this land has been abandoned and it has no intended use. Do you understand? It has no intended use at the moment. Now, since it has no intended use, you can carry it forward at cost or at fair value. Do you understand? Had it been you are using it for your business, it can be a PPE, IS 16. But it is IS 40 because probably that's the intention. And it was constructed as part of expansion. Do you understand? They've not determined the future use. So since they are not using it for daily operation of the business, but it will generate economic benefits outside the operations of the business. Do you understand? So it is IS 40. So when you have a property that you don't know what to use it for, it is IS 40, not IS 16. Okay? And of course, IS 40 permits you to change from whether you are using, if you are using cost model before, you can change it to evaluation model. Am I right?
Yes, sir, you are right, sir.
Am I right? So if you are, since it is a piece of land, a land does not depreciate, so you cannot say that it will depreciate. But adding being it's another property, then if the property can depreciate, then you subject it to depreciation if you are using cost model. There is no depreciation when you are using evaluation model. Am I right? You can only have evaluation surplus or deficit.
You are right, sir.
Yes, sir.
Right? Am I right, please? Okay. Any question? Any question?
There is no questions, sir. So far, so good. We are
Any question
following
on
you
that?
the way you are explaining it, sir.
Okay. Now, I guess that's all for that question. If you have any question on IS 40, IS 16, then probably we can look into it, right?
We are
we
there,
there,
sir.
please?
We are here, sir.
Okay. Now, there was one question we solved last week where we saw Lease. I can't remember that diet. I mean, 2 weeks ago or 3 weeks ago. I can't remember the diet. I can't remember the diet we solved. Now we had something on IS 14 or IS 14. I mean, IS 40, IS 16. I can't remember the topic. Okay. I think if someone can assist us, if someone can get another question, I can't remember that diet, please. Yes. Any question? Do we have any question? Or can we go to another topic? Can we go into another topic? Can we go into another topic, please? The A first.
Okay.
Yes. So what is the question saying here? What's the question saying for A? Explain how IFRS 16 requires lessees to recognize and measure rights of obligation under lease arrangement. Yes, how? So how do we recognize assets as a lessee? How do you recognize assets? Yes? Yes? Oh. Now, for recognition now, what's the definition? What's the recognition criteria?
The requirement again.
I'm asking for the requirement. What's the recognition criteria for a lease by a lessee, the tenant? What is the recognition requirement? How do you recognize? Eh? Hello?
I think it's recognized as possible by leasing.
What are the criteria? Recognition criteria. What is lease itself? Lease is that arrangement, right? That gives you the right to use an asset, to control the asset, right? For a
Yes.
period of time in exchange for a consideration. Am I right? That one has been established. We know that, right?
Yes.
Now, for the control now, the lessee must have that right. I mentioned two things. I said you must have control over the asset, and also the risk and the reward of that asset must be with you as the lessee before you can recognize it. So the lessee must have the right to obtain all the economic benefits to that asset.
And control the assets.
And I also have the right to
So
direct
control
the use of the asset.
of the asset. Yes.
You should not tell me how to use my asset. It is mine. Do you understand? And basically, this is on finance lease, right? Am I right?
Yes, sir.
So that's it. Those are the two things. You must have the right to control. You must have the right to control the use of the asset. The reward and the risk of that asset is also transferred to you. That is a lease. Of course, that is finance lease. Then in the case of operating lease, the reward and risk is still with the landlord or the lessor. All right. So that's how to recognize it. Once you have these two attributes, then it is a lease. Okay. So how do we measure it? Now we have two measurements for recognition and measurement. Now for measurement, you have initial measurements, right? Am I right? Nobody is saying anything.
Yes, sir.
Yes.
Initial measurement and subsequent
Yes, sir.
measurement. So for the initial measurements now, what are the things we look at? We have the lease payment. Am I right? And what makes up the lease payment?
The annual rentals.
Plus guaranteed residual value.
The guaranteed residual value and the
Right?
yes,
So it can be a fixed payment. It can be a variable lease payment, right? Now, if it is a fixed payment, whatever incentives you have, like a rebate, which I mentioned yesterday, a rebate or discount, you less all the incentives. Okay? And it can be a variable payment, which will now depend on the index or rate, just like we said yesterday. Am I right?
Yes.
Now, also you can have in the contract a right to exercise the price of purchase option, a right to exercise a purchase option.
Yes.
You can have it in the contract, right?
Yes, sir.
So these are the things we discussed yesterday. That's why I said you should be reading. Then also we have the discount rate. Don't forget, this is the book of the lessee. So the discount rate will now be the present value, right? And don't forget, your lease payment plus the unguaranteed, with the guaranteed residual value must be equal to what? Must be equal to what?
Present value.
Fair value and the initial direct.
Fair value and what?
Initial direct cost.
Initial direct cost. Can someone confirm that she's right? Is she right?
Saloon on there.
Is she correct?
It is correct.
You are sure?
Yes.
Okay. Who else has any question? Yes? Is there any other thing?
Hello, sir.
Yes, ma'am.
In a textbook that I was able to lay my hands on, they were talking about sublease. Please, what's the meaning of that sublease in IFRS 16?
Yes. So the sublease is talking about when you are under a lease, you acquire an asset through lease. You that you have acquired the asset, you now lease it to another person again. So to the initial landlord, to your own landlord, don't forget you are a landlord to that person, to the person you have leased it to. So to the tenant you have leased it to, you are a landlord, you are the lessor, the person is the lessee. You to your own landlord, you are the lessee, your landlord is the lessor. Your landlord to your own tenant, your landlord to your own tenant, the agreement between them is a sublease. So it means that your landlord does not have any control over the tenant. but he owns the property. That's a sublease. Are we together, please?
Okay, sir, but I'm not really clear very much. Is it like group account?
No. So this is it.
Okay.
You came to my office. Were you in the last question we solved on an arrangement with a motor supplier, a car dealer?
Yes, sir.
Now, those cars that were given to, what's the name of that company again? What's the name of that company? Bajakuta, right?
Bajakuta, yes, sir.
Those cars, Bajakuta also leased those cars to another company. Let's say Bajakuta leased those cars to me, right? Now, don't forget, in the initial arrangement, the company, the car dealing company is the lessor. Bajakuta is the lessee, right?
Okay.
Now, to Bajakuta, me, I am the lessee. Bajakuta is the lessor. Right?
Yes, sir.
Because Bajakuta leased it to me. Now, the relationship between me and the car dealing company, don't forget, I don't know them, but they are aware that their car has been leased out. So, me to them now, I am a sub-lessee to them. Because the lessee also leased it out. Do you understand? It's just like in a group company where you have sub-subsidiary. Do you understand it now? Do you understand it? Are we there?
I think she left. She has left before.
Sir?
I think she has left before. I think she has left before.
She has left. Network has thrown her out. Okay, when she comes back, probably will explain it again. So let's come back to this question, all right? So for the lease now, are we done with this question? Okay, we are still under measurements, right? So the initial measurement.
Yes, sir.
Our cost, the lease measurements cost, the lease amount will be the present value, not just the fixed payment or the variable payment. The variable payment after it has been subjected to discounting factor, right? Now, so which means the present value plus the guaranteed residual income, residual value, not income, plus the guaranteed residual value must be equal to what? Must be equal to what, please? Must be equal to the fair value of the asset, just like what she said. Who is that person? Is it the same lady that was thrown out?
No, sir.
Okay, must be equal to the fair value plus the initial direct cost, just like we have established that already. All right? So that's it. And we've talked about our initial recognition, whereby we have the right to use the asset, and there is a lease liability to that. Right? Okay, the next one we have is subsequent measurement. Our subsequent measurement can be on cash model, right? Am I right?
Cost model.
Eh?
I said cost model.
It can be a cost model, right? And it can be what?
Evaluation
or fair value. Right? So that is that. Any other question? Any other question?
Sorry, please. I wanted to get something. You know, we disclose that in the book of the lessee, the asset, the asset will be treated as an asset, and also it will be treated as a liability. Is it the payment on that asset? Okay. Like let's assume let's use Bajakuta for example now. In the book of the company that owns the vehicle, those cars will be treated as an asset. and you also said of it as liability.
Treated
Is
as
it
an
a
asset in
payment
the
that will
book
pay
of
as a
the lessee,
liability?
pa.
Let's see, yes, yes. Then the liability part of it, I'm now asking that is it the payment will be the liability?
Yes, the payment is the liability.
Thank you.
The payment is the liability. Any other question? So our subsequent measurement. Yes, for our subsequent measurement, what do we do? We already said either cash or fair value model, right? So you are to use fair value model if it is IS 40. If the asset under lease is an investment property, that you use fair value. If the asset under lease is a PPE, that you use evaluation model. Abi, we have that already. Now, what else do we need to know? Yes, any other thing? Any other thing? Now,
Reassessment.
reassessment. Where do we have reassessment? Are we still on question 1A? I mean, Roman figure 1.
Yeah, I'm saying that what if there's a change in a lease term that the lease liability must be reassessed or remeasured?
Okay, where we have reassessment or remeasurement. Right? Is
Yes.
that your question?
Yes, that's what I'm saying. Yes, sir.
So for reassessment now, okay, reassessment, like we said, is that you want to assess the terms and condition of the lease. All right, it can be a change in the lease term. It can be a change in the payment, in the index-linked payment. It can be a change in the residual value, guaranteed residual value. So that is reassessment. We are looking at the assessment of the asset itself. I mean, of the lease agreement. Okay? So that is it. Now, remeasurement is when you are revising a discount rate or the original rate. Okay? When there is a change in the lease term or the purchase option. Right? So that is remeasurement. When you are remeasuring your discounting factor, your discount rate. Modification has to do with what? When you are changing the scope of consideration of the asset, of the lease asset. Okay? So modification, like I said, is whereby I was using a room self-contained, then I got married and I went to a 2-bedroom apartment with the same landlord. That is modification. All right, that one is not cancellation of lease. If it is a long-term lease, it is not cancellation of the lease. It is not cancellation of lease. Instead, it is modification of the existing lease. It can be upward, it can be downward. All right, but if it is not a separate item, probably there is a reduction in the scope, which is just what I said. It could be a separate item whereby we had a standalone price to a new asset. Are we together? Are we together?
Yes, sir.
Yes, sir. We are with you, sir.
So that is what we have. Any other question? Shall we proceed to question Roman figure 2?
Yes, sir.
Okay. Now discuss how a lease should measure the right and obligation under a short-term lease arrangement. So how do we measure right and obligation? Hmm? Yes.
The lease that the commencement date is less than 12 months or has a 12 months tenure.
What do you say?
I'm saying that a lease arrangement is a type of lease that the tenure is either 12 months or less than 12 months.
Uh-huh. Yes.
So there is not going to be right of use assets.
Yes, there will be no right of use assets. Uh-huh.
It just be recognized
Then
as
the
an
lease payment
expenses.
will be an expense.
Uh-huh. The lease payment will be an
The lease,
expense. Thank you. That's how to recognize it now. Right?
yes.
Uh-huh. So how do we measure it? Initial measurement will also be what? Initial measurement is also as an expense. You recognize your lease payment as an expense. There is no right of use assets. Right? And the subsequent measurement is also as an expense in the period where they occur. Am I right?
Yes, sir.
Any other question? So a material was shared with SBR. There is a group. Okay, go ahead, please. Go ahead. Yes. Any other thing? Any other thing? I think that's all. Now let's go to question B. That will be the last question for today. Question B. Who is reading question B for us? Question B. Who is reading question B for us?
Okay, question B. As the financial controller of Ododo LLC and PS quoted company, you are currently preparing the financial statement of the company for the year ended March 31st, 2023. Chief Okechukwu, the finance director, has requested for the following information is not clear to him as regards the treatment company lease aspect in view of adoption of IFRS 16 lease as against the use of the previous IFRS 17 lease. Or it states as follows. 1. When I look at the notes to the financial statement, which gave use of plants
I
and
don't know if I'm
equipment.
not the only one hearing you clearly. Can someone confirm that
Okay.
it is my network?
No, it's not clear enough.
Okay.
Okay. As financial controller of Ododo PLC, NGS quoted company, we are currently preparing the financial statement of the company for the year ended March 31st, 2023. Chief Okechukwu, the finance director, said for the following information is not used as regards the treatment of company lease act in view of the adoption of IFRS 16 lease as against the use of the previous IFRS lease. Therefore, it states as follows. When we look at the notes to the financial statement, which gave details of our PPE Separate components appeared for the first this year. This component was called right of use. Upon further investigation, I discovered this related warehouse with lease with effect for 1st October 2022 to provide for space. The warehouse was leased for 5 years lease contract at an annual lease rental of 5 million naira payable in arrears. There is no option to extend the lease at the end of the 5 years period. Based on current annual interest of 10%, these rentals have a total present value of 18,050,000 naira. Incur a direct cost of 1,050,000 naira when arranging for the lease with the owner. The carrying amount of the right of use asset, which is shown in our financial statements, is 18 million naira. I don't understand this at all in particular. As the financial controller, I am sure you are aware that the warehouse costs at least 11 million naira to purchase outright and has a useful life of around 25 years. How can this be presented as assets in our company's financial statements in compliance with IFRS 16 lease? 3. Also, where did the figure of 18 million stated as right of use comes from? 4. Apart from right of use assets, how else will the transaction affect our financial statements? Required. Write a memo to the finance director explaining the issues raised above. 12 mark. Note: the finance director only needs the explanation, not details working. Thank you.
So that's it. Now, your finance director needs explanation on the issue above. What is the issue? Now, looking at the question, Oga does not understand what is going on. That's just the summary. And he wants you to explain. Now, if you are giving him figures, you are just giving him a headache. So, you are the finance director, right? You want to explain to Oga the treatment of the company's leased asset after you've adopted IFRS 16 against the use of IS 17. The differences between IS 17 and IFRS 16. He doesn't understand the changes. He doesn't understand the difference between the two of them. Is he confused? And don't forget, there are some things that IFRS 16 has abolished. Right? It has changed so many things. Now, he said this. He said, when I looked at the notes to the financial statement, which gave details of our property, PPE, a separate component appeared for the first time this year. This component was described as right of use. Then he discovered this relates to a warehouse which they leased out in October 2022 to provide a space. They leased it out. Do you understand? They leased it out. Now, the warehouse was leased for a 5-year contract at an annual lease rental payment of 5 million, payable in arrears. That is, at the end of the year. Am I right? So what are we to do? Now, we need to understand that the adoption of IFRS 16 itself will bring a significant change, whether we like it or not. Do you understand? Now, what are these changes? That right of use assets that he has identified, what do you understand by the right of use? What does right of use mean? And when do you make use of right of use? Yes?
When the lease period is more than 12 months.
Yes, when the lease period is more than 12 months, yes, you will have a right of use.
It is a way of recognizing the asset
Sorry?
It is a way. Hello, sir.
Yeah?
It is a way of recognize the asset, that asset in the financial statement of the leasing. So which
What do you say, sir?
under the it is a way of recognize the asset in that the financial statement of leasing instead of write the asset the right under the non-current the right of use and name of the asset so that they will know that the asset is for licit asset, not the company own asset.
Okay. Yes, we have that. Okay. Now, the right of use. You make use of right of use for two reasons, not just one. Number one, when the lease term is more than 12 months. Number two, when there is a lease liability on the financial position. Okay? So that's it. Now, the right of use is not in IS 17. Under IS 17 is either operating lease or finance lease. There is nothing like right of use there. That is a key change. That is what it does not understand. It is not clear. Right? So that's it. Then what again? What again? Now looking at this item, it's also saying that there is no option to extend the lease at the end of the lease term, Abby. At the end of the lease period. Am I right? Right?
Yes.
Sorry, I didn't get what you said.
Okay, the first thing it does not understand is the right of use. Okay, now that right of use, we make use of is asking what is right of use. Right?
Yes, sir.
Uh-huh. So, and we've explained right of use, right? Do you get the explanation? Did you get the explanation of that right of use? Did you get the explanation of right of use?
Yes, sir.
Uh-huh. So now, in this case, in the case of this particular project, this particular lease, we are entitled to an annual lease of 5 million, right? Which is payable in arrears. Now, interest on the lease. Are we given the interest? There is no option to extend beyond 5 years. The interest is 10%, and the rental income have a total present value of 18.95. How is it 18.95 million? Yes, who is giving us that? How? Well, that's what the question has given us. Based on the contract, right? It has given us 18.95 million. And then there was a direct cost of 1,050,000 when arranging for the lease with the owner. Are we the one leasing? Are we the landlord? Are we the lessor or the lessee in this question?
Yeah, the landlord and the lessor.
I didn't say we are the lessor.
Landlord.
Are we the lessor or the lessee? Oh God, what is happening to our network? What's happening to our network now? I can't hear you guys very well. Who is the lessor? Who is the lessee? Are we the lessor or the lessee?
Lessor.
Why? Why do you say we are the lessor?
Hello, sir.
Yes, ma'am.
The company is the lessor because they said while they are doing the arrangement of the leasing out of the of that warehouse, they incur some cost while doing it. So they are the lessor.
Okay, so you are saying it is only lessor that incurs a direct cost.
Because I thought you said all the risk and everything incurred during the.
That one is
Yes,
not
sir.
risk. This one, direct
Okay.
cost is for me to get the lease arrangement. I need a professional valuer to estimate the value of the asset. I need an accountant to be in charge of the statutory requirements. I need a lawyer to tell me the law, what the law says about it. Those are the direct costs.
Okay, sir. Okay, sir.
Hello, sir. Hello, sir.
Yes, sir.
Can you hear me, sir?
You can hear you, sir.
Yeah, because you look at that's why I said that the warehouse was for a 5 year contract at an average rental. We are going to be paying, we are going to be
I swear I can't hear what this man is saying. I
well,
cannot hear what he's saying. Can someone please help me? If you hear what he's saying, please, someone should interpret for me.
okay, can you hear me now?
Sorry?
We are the lessee. In the sense, the last part that said the warehouse for 5 years contract, annual lease rental, in arrears. So we think those are like owners of the asset out.
I don't understand though. Can someone hear him? Can someone hear him? Eh?
No, sir, I think it's his network.
I could not hear him from you also.
Can you hear me now, sir?
So me, I'm asking.
Can you hear me now, sir?
Yes, we can hear you small.
Okay, sorry, I'm on the road, right? So what I'm saying here is that the last part of it says that we are going to be securing a rental, lease rental of 5 million payable in arrears. That means we are going to be receiving those rentals. So that's the finance, and we are the lessee, not the lessor.
Okay. At least if I don't hear anything, I heard that we are the lessee, not the lessor. Yes, I heard that we are the lessee, not the lessor. I heard that one. Yes. So now, in actual sense, we are the lessee, not the lessor. Is right. And I will give you the point in the question. Now let's have a look at it. Number one, he said, when I looked at the financial statement in our own PPE, I saw a separate component for the first time, which is right of use. That means it is in our account to use it, and it is part of our PPE. For us to recognize it as our PPE, then we are the lessee. That's number one. Shall I proceed? Shall I give you another reason?
Yes, sir.
Number two is that upon investigation, I discovered that this relates to a warehouse which we leased to provide for space. If we give out a warehouse, if we are the lessor who rented out a warehouse, are we providing for space?
No.
No. So you can see that we are the one who leased it. Number three reason is that the lease contract at an annual lease rental payable, not receivable.
Oh, yeah,
It
the one
is
that.
payable, not receivable. We are the one to pay now, Abby.
Yes, sir.
Yes, sir.
So we are the lessee, not the lessor.
Wow.
So for the annual lease rental now, we are paying 5 million naira in arrears. And interest rate will be 10%, which will be charged on the total balance. Now, what is the total cost of this lease? If you are paying 5 million naira every year, how many years is the lease?
5 years.
5 years.
5 years, right?
Yes.
Now, if you are paying 5 million naira every year for 5 years, what do we have? Now, if I'm paying 5 million naira, we are paying this first 5 million at the end of the year, not at the beginning. Am I right?
Yes.
Yes.
Now, it means that the 10% that we have, you see, we have another one of 18 million, 18.950 million plus 1,050,000. Right? This is the direct cost. These rentals have a present value of 20 million. This is 20 million, Abby. This two is 20 million, right? Am I right? If I
Yes,
have
sir.
these two together, is it 20 million? Yes,
Yes,
this is
sir.
20 million.
Present value and initial.
18,950 plus 1,950. That's
It's
20 million
20
now.
million. It's 20 million, sir.
Okay. Now, so I have the rental of 10%, the interest, annual interest on the rent, 10%, right? Now, the question is saying that, why do I have 18 million? The current amount of the right to use is showing 18 million. Why? I don't understand. So how? How now? Who is explaining that? Yes? How is it showing 18 million in the account? Number one, this lease agreement is from when to when? Taking effect from October. Abi?
Yes, sir.
When did they close the account? Accounting year end is March. Abi?
Yes, sir.
Now, October 2022 to March 2023 is what? How many months?
6 months.
6 months.
6 months.
So why do we have 18 million? Eh?
Maybe 6 divided by 12 times 20.
Okay. 6 divided by 12 times 20 will not give me 18 million.
Will not, though.
Do you want to know how?
Yes, sir.
Now the asset itself is 20 million. 18 plus 1.05 is 20 million, right? We've agreed that that is 20 million. That asset will depreciate. Abi?
Okay, sir.
Depreciation is how many years? 5 years.
5 years.
Now, 20 million divided by 5 will give us what?
4 million.
And will give us what?
4 million.
4 million. But now, in this case, we have not spent up to 1 year. So it means 20 divided by 5, which is 4 million, times 6 months over 12. Does that make a sense?
Yes, sir. So
20
it's
divided
2
by
million.
5.
So 2 million minus 20 million.
Yeah, that is what you have. That will be
Okay,
the
sir.
present value. And don't forget, that amount is the present value you'll be paying.
Oh.
And don't forget what will be in your account. The PV plus any guaranteed residual value. In this case, do you have any guaranteed residual value? No.
No.
Aha. So that is so you are just to explain to him, why do we have 18 million in the account? That is the 18 million. That is 18.950 plus 1050, which is 20 million divided by 5 years
5
times 6
years.
over 12.
6 all over 12.
You are noting it, right?
Yes, sir.
So we've settled that one. That part we've settled it. Shall we proceed?
Yes, sir.
Now, don't forget we are using right of use. in the financial statement, and we did not add this to our other PPE, right?
Okay, sir.
Yeah.
Yes.
Any other thing? Shall we proceed?
Let's move on, sir.
Okay, now, the right of use is recognized as a lease liability, right? And it is initially measured at the present value of this 18 million. That is what we have here. Total present value of 18,950,000. Right? That's the initial measurement, present value. So now, don't forget, our liability will be increasing because of our finance cost, interest rates. Right?
Okay, sir.
Yes.
So that is that. Any other question? Any other question on that first line? No other question, right? We've answered the question.
Okay.
We've explained what he does not understand. Don't forget, this question is asking us to explain.
Yes, sir.
Now, the next one is that as the financial controller, he is telling us again, this is a direct statement. I am sure you are aware that the warehouse costs at least 100 million to purchase, that is outright purchase, and a useful life of 25 years. How can this be presented as assets at our company's financial statement in compliance with IFRS 16? Yes, how? How now? Yes? Who is answering that question? Why? Why? The question is not how. The question is why. And we've explained up to this where the 18 million figure stated as right of election, right of use come from. We've explained this. Right? Now we've explained this 18 million as well somehow. We did not purchase it outrightly. It is under lease. And the fair value is what we recognize in our lease. Do you understand? Are we there?
Sorry, what did you say, sir?
I said we've explained this that it is under lease and we have recognized the right of use. Right of use is what we recognize since we did not purchase it. All right?
Yes, sir.
Yes.
Now, how do we treat this transaction in our financial statement? So how do we treat it now? What to be in our financial position? What to be in our financial position? This is our financial position. Annual lease rental of 5 million. Now this 5 million is payable in arrears, which is at the end of the year, right?
Yes.
Now, is this a non-current liability or a current liability? This 5 million.
Current liability.
Why?
It's current.
You know that whatever you say, I will ask why.
It is paid annually.
Because it's paying annually.
When are we paying this 5 million? In how many months' time?
5 years now.
This 5 million, when are we paying it?
5 years.
5 years.
Every
This first one. When are we paying this first 5 million?
And the ending of the year.
End of the year, which is in how many months' time?
6 months.
In 6 months' time, so it's a current liability. Right?
Yes, sir.
The balance will be recognized as what? Is it a current liability as well?
No.
The balance will be a non-current liability. Since it's
Non-current
more than a
liability.
year, right?
The one due is current 5
Our right
years.
of use. So he's asking that how can this be presented as asset in our company's financial statement? The question is asking you for presentation. And he has already mentioned that up here, that he saw it. He said he saw it, that, where is it? Where is it? He said he saw it as a separate component in our financial statement as right of use in the PPE, the details of the PPE. So which means in the financial position, your presentation is what? Under non-current assets, but a separate component under right of use. That is the presentation. So he's asking the question, he has seen it already, but he's asking again. Do you understand? So how can this be presented? In order to comply, he have answered it. So that is that.
Hello?
Yes, ma'am.
Okay. I think presentation, he cannot just write the whole amount. Maybe they are paying it 1 year after the year.
And the lease liability is what you are separating between non-current liability and the current liability.
Okay, sir.
Any other thing? Any other thing?
No, sir.
Okay. So apart from right of use, how else will the transaction affect our financial statement? Yes, apart from the right of use, we've talked about the lease liability, right? The right of use is under the asset. The lease liability is the other part. Those are the ways it will affect the financial statement. Now, for our lease liability, now we've recognized the one that will go into current liability. We've recognized the non-current liability, right?
Yes.
Now, if there is any interest, like that 10% annual interest, it will go into where?
Under PN. You recognize under PN.
Under P&L. Thank you, sir. Yes. Now, don't forget, the question is financial statement. What else will it affect? So it has affected our statement of financial position under right of use and liability. It has affected our income statement under what? Expense. Abi, what else will it affect?
Yes.
Which other financial statement will it affect? We have cash flow statement. Will it affect our cash flow statement? Will it affect our statement of changes in equity?
It will be in the notes.
It will be in the notes to the financial statements. Thank you. We have all the disclosures there. Yes. What again? Will it affect our cash flow? Will it affect our cash flow?
Yes, sir.
It will affect our cash flow.
Yes,
financing
sir.
activities.
Yes, sir.
Right? Our lease liabilities will change. Right? The changes in our lease activities, it will change. Since we are making payment, we are paying 5 million naira. It will affect our cash flow as well. And it will affect our notes to the financial statement. Those are the other financial statements it will affect. Any other question? Any other question? Any other question?
Hello, sir. What of that depreciation we are charging? Where is it going to appear, sir?
Where does depreciation go to? Income statement and statement of financial position. Right? The depreciation will be expensed for the year, and it will reduce the value of the right of use.
Of use, exactly.
Any other question? No question, right?
No question, sir, yet.
Okay. So I'll see you all in our next class. That will be next week Friday, right? Yes, next week Friday. Good night, everyone. Enjoy the rest of
Thank
the
you.
weekend.